A gold is going to cross 8,000 rupees per gram in the next 15 days, and I'm going to show you exactly why this is mathematically inevitable. This is not speculation. This is not hopium. In the last 72 hours, we've seen 3 critical data points converge that have only happened twice in the last 20 years, and both times gold exploded higher within 2 weeks. The COMEX vault data just released shows registered gold inventory at a 15-year low. The US dollar index is breaking critical support. And central banks globally just reported record gold buying for the 6th consecutive month. If you own gold, if you're thinking about buying gold, or if you're worried about protecting your wealth in Pakistan and India, the next 20 minutes will show you exactly what's coming and how to position yourself. Here's what they don't want you to know. Let me paint the picture of what just happened in the last 48 hours, because the pieces are falling into place for a massive gold rally that will push prices in Pakistan above 8,000 rupees per gram. 2 days ago, the Federal Reserve released minutes from their last meeting, and buried in the text was an admission that inflation is proving more persistent than they expected. Translation: they're trapped. They can't raise rates without breaking something in the economy, and they can't keep rates high for much longer without triggering a recession. The market immediately understood what this means for gold. When central banks lose credibility on inflation, money flows to hard assets. We saw gold spike $40 in a single trading session after those minutes were released. Now let's connect this to what's happening in Pakistan specifically. The Pakistani Rupee closed yesterday at 289 rupees per dollar, which is just 3 rupees away from the all-time low. The State Bank of Pakistan's foreign exchange reserves dropped by another $300 million last week, bringing total reserves down to $7.6 billion. That's barely enough to cover 6 weeks of imports. When reserves are this low and the currency is this weak, people panic into gold, and we're already seeing it. My sources in the Karachi gold market tell me that dealers sold out of 1 kilogram bars in the last week. There's a shortage of large denomination physical gold because institutional buyers and high net worth individuals are moving serious money into gold before the rupee breaks completely. Here's the timeline that makes 8,000 rupees per gram inevitable in the next 15 days. First, we have the U.S. jobs report coming out in 6 days. If that report shows weakness, which leading indicators suggest it will, the dollar is going to sell off hard. A weaker dollar means higher gold prices globally. Second, we have the Pakistani budget announcement in 11 days. The IMF is demanding fiscal tightening, which means the government will have to announce painful measures that will further weaken confidence in the rupee. When that budget is announced and people see new taxes and spending cuts, they're going to rush into gold as a store of value. Third, we're heading into the peak wedding season in Pakistan, which traditionally drives huge physical gold demand. All 3 of these catalysts hit within the next 15 days. This is the perfect storm. Let me take you deep into the data, because this is where we can prove mathematically that 8,000 rupees per gram is not just possible, it's probable. Look at this chart of gold prices in Pakistani rupees over the last 6 months. We started at around 6,800 rupees per gram in September, and we've been climbing steadily with higher lows throughout. In the last 30 days alone, we've gone from 7,200 to 7,500. That's a 300 rupee increase in just 1 month. The rate of ascent is accelerating. If we maintain the current trajectory, which I believe we will given the catalysts I just mentioned, we hit 8,000 rupees in 12 to 15 days. But here's what makes this even more certain. We're not just dealing with a linear trend. We're dealing with an exponential move as panic buying kicks in. Let me break down the 2 components driving gold prices in Pakistan, because understanding this is critical. Component 1 is the international gold price in US dollars. Right now, gold is trading at $2,083 per ounce. Component 2 is the rupee-dollar exchange rate, currently at 289 rupees per dollar. When you do the math, that gives you a theoretical gold price of around 7,300 rupees per gram, but the actual market price is 7,500. That 200 rupee difference is the physical premium, which reflects supply tightness and local demand. As we approach 8,000, I expect that premium to widen even further to 300 or 400 rupees per gram. Now let's talk about the COMEX situation, because what's happening in the paper gold market is absolutely critical to understanding the supply dynamics. The COMEX reported registered gold inventory of just 8.4 million ounces as of the last delivery report. That's the lowest level since 2008, right before gold went from $900 to $1,900 in the following 3 years. Here's why this matters. The COMEX is where the price of gold is theoretically discovered through futures contracts. But when registered inventory, which is gold actually available for delivery, drops to these levels while open interest stays elevated, it tells you the paper market is becoming disconnected from the physical market. Look at this chart of COMEX registered gold inventory over 5 years. We had over 13 million ounces in early 2020. Today we're at 8.4 million. That's a 35% decline in available gold, while global demand has been surging. Central banks alone bought over 1,000 tons of gold last year, the highest annual purchase in 55 years, and they're not slowing down. In the first quarter of this year, central banks bought another 290 tons. When you have declining inventory and rising demand, basic economics tells you price has to rise significantly to ration that demand. Here's the data point that should alarm anyone who thinks gold is expensive at current levels. The gold-to-money supply ratio is at historically low levels. What does this mean? Take the total amount of gold ever mined, approximately 200,000 tons, and divide it by the global money supply, which is over $100 trillion when you include all major currencies. The ratio tells you how much the monetary base has grown relative to the physical gold supply. Right now, that ratio is at levels that historically precede major gold bull markets. In simple terms, there's way too much paper money chasing way too little gold. The correction mechanism is higher gold prices. Let's talk about the Shanghai Gold Exchange because this is where we can see the real physical demand dynamics playing out. The Shanghai Gold Premium, which is the difference between gold prices in Shanghai versus London, has been persistently positive for 8 consecutive months now. It's currently at $18 per ounce premium. That means Chinese buyers are paying $18 more per ounce than Western buyers to get physical gold delivered in China. This tells us gold is physically flowing from west to east at an accelerating rate. When gold is leaving Western vaults and moving to Eastern vaults, it reduces the amount of gold available in Western markets, which includes the gold that would normally be available for export to Pakistan and India. Here's what they don't want you to know. The banking system globally is under stress, and gold is the canary in the coal mine. We saw 3 major U.S. banks fail last year. We've seen Credit Suisse collapse and get absorbed by UBS. Deutsche Bank's stock price is signaling severe stress. When banks are unstable, depositors and institutional investors move money into gold because gold has no counterparty risk. You don't need to trust a bank or a government when you own physical gold. The smart money has been accumulating gold for 18 months, and we're now reaching the inflection point where the crowd starts to wake up and chase prices higher. That's when we see vertical moves like what I'm predicting in the next 15 days. Let me give you the Pakistan-specific factors that make 8,000 rupees inevitable. The Pakistani government owes the IMF massive amounts of money, and the IMF is demanding structural reforms that are politically very difficult to implement. Every time the government tries to implement these reforms, there are protests, strikes, and political instability. This creates uncertainty, and uncertainty drives gold demand. Additionally, Pakistan's current account deficit remains stubbornly high, which means the country is spending more foreign currency than it's earning. This puts constant downward pressure on the rupee. As long as the current account is in deficit, the rupee will weaken, and a weaker rupee means higher gold prices in local currency terms. The smuggling factor is also critical to understand. Pakistan has a massive informal economy, and when official gold prices rise, or when there are import restrictions, smuggling increases dramatically. Smuggled gold comes through the Afghan border, through sea routes, and through other unofficial channels. While smuggling provides some relief to supply tightness, it also indicates the strength of underlying demand. People are willing to pay premiums and take risks to get gold, which tells you the demand is not price-sensitive at these levels, it's panic-driven, and panic-driven demand is what fuels vertical price moves like we're about to see. All right, let's get into the technical analysis because this is where we can identify the exact levels and triggers that will push gold through 8,000 rupees per gram. Looking at gold and Pakistani rupees on the daily chart, we're currently at 7,500 rupees per gram. The immediate resistance is at 7,650, which was tested 3 times in the last 2 weeks, but hasn't been broken yet. Once we clear 7,650 with conviction, the next resistance is at 7,800. That level should fall quickly because there's not much technical resistance between 7,650 and 7,800. The key level to watch is 7,850. If we break through 7,850, we're going to see a momentum rush to 8,000 within 24 to 48 hours. The moving averages are telling a very bullish story. The 50-day moving average just crossed above the 200-day moving average 6 days ago. This is called a golden cross, and it's one of the most reliable technical indicators of a sustained uptrend. Historically, when gold forms a golden cross, the average gain over the following 90 days is 15 to 18%. If we apply that to current prices, we're looking at gold reaching 8,600 to 8,700 rupees per gram within 3 months. But the first target is 8,000 in the next 15 days, and the technicals fully support that move. The RSI on the daily chart is at 64, which means we're in bullish momentum territory, but not overbought yet. An RSI between 60 and 70 typically indicates a healthy uptrend with room to run higher. We're not seeing divergence or signs of exhaustion. The MACD histogram is expanding on the bullish side, which confirms that momentum is building, not fading. The volume profile shows accumulation behavior, with higher volume on up days and lighter volume on pullbacks. This is exactly what you want to see in a bull market. Smart money is buying aggressively, and retail is about to chase. Zooming into the 4-hour chart, we can see a very clear ascending triangle pattern forming. We've been making higher lows for the last 10 days, while the highs have been contained at 76.50. This is a continuation pattern that typically resolves to the upside. The breakout from an ascending triangle usually happens with a powerful momentum candle that clears resistance and doesn't look back. Based on the pattern, the measured move from a breakout at 76.50 targets 8,100 rupees. That's well above our 8,000 target, which gives me even more confidence that 8,000 will be reached easily. Now let's look at gold in US dollar terms to understand the international picture. Gold is at $2,083 per ounce, and the critical resistance level is $2,100. We've tested $2,100 twice in the last month and been rejected both times, but the setup now is different. The dollar index is breaking down, falling below critical support at 102. When the dollar weakens, it takes pressure off gold as an inflation hedge. If gold breaks $2,100, which I expect in the next week, the measured move targets $2,250 to $2,300. That's a 10% move in dollar terms, which would translate to approximately 800 rupees per gram increase in Pakistan when you factor in the exchange rate impact. The correlation between the dollar index and gold prices in Pakistan is critical to understand. A 1% decline in the dollar index typically leads to a 1.5% increase in gold prices in dollar terms. But for Pakistan, there's an additional layer. When the dollar weakens globally, the Pakistani rupee often weakens even more because it's seen as a riskier currency. So you get a double impact. Gold goes up in dollar terms, and the rupee weakens against the dollar, giving you a compounding effect on gold prices in rupee terms. This is why I'm so confident we hit 8,000 in the next 15 days. We're getting tailwinds from both international gold strength and domestic currency weakness. Let me give you my specific predictions with exact price targets and timelines because I want to be held accountable to these forecasts. First prediction, within 7 days, gold breaks 7,800 rupees per gram. The catalyst will be the U.S. jobs report, which I expect to show weakness. If non-farm payrolls come in below expectations, which several leading indicators suggest, the dollar will sell off by 1 to 2%. That pushes gold in dollar terms to 2,150 to 2,200, combined with a rupee that will likely test 292 to 295 per dollar. We easily reach 7,800 rupees per gram. This is the first major milestone on the way to 8,000. Second prediction, within 15 days, gold crosses 8,000 rupees per gram for the first time in history. The catalyst will be a combination of technical breakout momentum and the Pakistani budget announcement. When the government announces the budget under IMF pressure, there will be immediate negative reaction to new taxes and subsidy cuts. The rupee will come under pressure, potentially spiking to 300 rupees per dollar briefly. Even if gold in dollar terms stays flat at 2,100 at 300 rupees per dollar exchange rate, gold would be at 8,100 rupees per gram. But I don't think gold in dollar terms stays flat. I think we're at $2,200 by then, which puts us comfortably above 8,000 rupees. Third prediction. Once we cross 8,000, we don't come back below it for at least 90 days. 8,000 becomes the new support level, and we consolidate between 8,000 and 8,500 for several weeks before the next leg higher. Why am I confident about this? Because round numbers become psychological anchors. Once gold crosses 8,000 and the media starts reporting it, people who were sitting on the fence will rush to buy before it goes even higher. This creates a self-reinforcing feedback loop. FOMO buying supports the price and prevents significant pullbacks. We saw this exact pattern when gold crossed 7,000 rupees for the first time. It happened fast, and we never went back below 7,000. Look, here's the bottom line. Gold crossing 8,000 rupees per gram in the next 15 days is not a wild prediction. It's a mathematical probability based on converging technical, fundamental, and macro factors. The COMEX inventory is at crisis levels. The dollar is breaking down. The Pakistani rupee is under immense pressure. The budget announcement will trigger uncertainty. and the technical setup shows an ascending triangle ready to break out. All of these factors point to the same conclusion. 8,000 is coming, and it's coming fast. If you've been waiting to buy gold, thinking prices will come back down, I believe you're making a mistake. The trend is your friend, and the trend is clearly higher. Every pullback in the last 6 months has been a buying opportunity, and those pullbacks are getting shallower. We're in the acceleration phase of a bull market, and acceleration phases don't offer many chances to get in at good prices. If you believe in protecting your wealth, if you understand that the Pakistani Rupee is structurally weak, then gold at 7,500 rupees per gram is not expensive. It's appropriately priced for the risk environment we're in. If you found this analysis valuable, if this gave you a clear roadmap for what's coming in the next 15 days, I need you to smash that like button right now. Seriously, hit that like button because it tells YouTube to share this video with more people who need this information. And here's what I want from you in the comments. What do you think? Do you believe gold crosses 8,000 in the next 15 days? What's your price prediction? Are you buying at these levels or waiting? Drop your thoughts below. I read every comment and I'll respond to the most interesting predictions. If you're not subscribed to this channel yet, you're missing out on time-sensitive market analysis that can help you make better financial decisions. Hit that subscribe button right now and turn on notifications because when gold breaks 8,000, I'm going to do a live breakdown of what happens next and where we go from there. These markets move fast and you need to stay informed. Don't be the person who watches gold hit 8,000 and wishes they had seen this video earlier. Take action now. I'll see you in the next one and I'll see you on the other side of 8,000 rupees per gram. Stay sharp.